Hi, guys, welcome. My name is Dave Coker. This is Talking About Finance. 7 slides for 7 days, just some of the stuff I've noticed going around the net. Really interesting one here. For the past year, we've seen increasing yields at the long end of the curve. So what I've got here is I've got the US 30-year bond, and we're looking at the yield, essentially, that the United States government has to pay to borrow money for 3 years. And you can see over the past year, until about a month ago, for the past year, interest rates were rising, indicating that the cost of financing this debt was increasing. Investors were demanding higher returns to hold US debt. And something really fascinating happened because you can see here it hit a resistance line. And now, again, they're starting to fall. So we're seeing them starting to burn off at the long end. Really fascinating to see that, guys. And we'll have to pay attention to this and see exactly what happens further. Talking about things falling, Bitcoin last night got hit in a major way. And we saw a huge drop in the price of Bitcoin. And I thought what I would do, and it seems to be based upon rumors that I believe are unfounded about the Treasury is going to prosecute several US banks for facilitating money laundering via Bitcoin. Uh, let's not really talk about the merits of that case. It's sort of a rumor. I haven't seen anything on wire services. And besides, Department of Justice prosecutes, not the Treasury. But regardless, I thought what I would do is I'd take a look at Bitcoin, take a look at gold, and we'd look at the ratio of Bitcoin to gold. And really fascinating here, guys. You can see and I've baselined it from January 1st, 2015 with I'm getting the data off Fred. And this was as far back as they went for Bitcoin. And you can see Bitcoin since that date, a 21,176% return. Gold's up 49%. And look at that ratio. That's really fascinating that Bitcoin is commanding such a huge price compared to gold. And disclaimer here, guys, I've got both assets, but I'm not selling my Bitcoin yet. I'm not selling my gold. I'm just going to hold on and see what happens. Equity is eating all the capital. It seems most of the money is going into, well, some's going into Bitcoin without a doubt, or stocks. And this is off Bloomberg. It's world total stock market capitalization. You can see we're at record levels, guys. We're going back over a decade here, back to '03, and we're at record levels in terms of the amount of money sloshing around in the stock market and the value of companies that are traded on the stock market. So how are shares doing overall? Are they fairly valued or bubbly? Well, a little bubbly. A lot of people are starting to raise concerns about share prices in a bubble. This is Shiller's cyclically adjusted price to earnings ratio, or CAPE, CAPE. You can Google him up and find it. He publishes the data and you can take a look at it. And we're at levels, guys, we haven't seen in a while. We're at levels that far exceed. You can see we got the Black Tuesday crash in 1929, got the Black Monday crash in '87. We've got the dot-com bubble, and we're at levels approaching the dot-com bubble. How is it going to end? Nobody knows. But again, in the spirit of full confession, I'm still buying stocks here and there, but my motivation, as you guys are probably aware, is I only buy shares that pay dividends. So I'm not interested in share prices. I could care whether they go up or they go down as long as I get paid. So in other words, I purchase cash flow. Yeah, really fascinating that it's so high right now. And how will it end? Maybe not too well. And you can see every time it hit a relative high, it tend to drop. So regardless, what about real assets? Let's take a look at commodities. And like we did with gold, Bitcoin and gold earlier, we're going to take a look at the commodities to the S&P 500 ratio. Now, the long run, this is off Bloomberg. The long run mean is 3.8. You can see we're well below it. So it's a quotient. We're not really sure what's overvalued, what's undervalued, although I've got my view that stocks are overvalued. But again, let's just go with it. Let's take a look at it. And let's see what's happening there. So there might be some opportunities to move into commodities. In other words, if the economies start to recover full steam, commodity prices might start to readjust. And share prices, they could fall. They're a little overvalued. So I'm sort of talking my book here. You can see where I'm putting money when I do buy shares and things like that. So when we get back to the real economy, Here's an interesting chart. We've got subprime auto borrowers who are basically late on their payments. And guys, look at this, it's ticking up. What a surprise. A lot of people aren't working, a lot of people don't have money. And if you're a subprime borrower, you don't have a lot of liquidity. Remember, these aren't prime borrowers, these are subprime. They're challenged to begin with. God bless them. And you can see 60 days late on payments, it's starting to surge. We'll have to pay attention to that. But at least businesses are doing well. This is a real interesting chart, again, from Bloomberg. And what we've got here is we got the key things of interest: unemployment and bankruptcies. GDP is put in there as well. But check this out. Start from the left-hand side of the chart. You can see there's a strong correlation between unemployment and bankruptcies. Those two series tend to move together. Unemployment increases, bankruptcies increase. Unemployment goes down, bankruptcies tend to fall, to contract. Until we got up to 2020. Look at this. Unemployment soared and bankruptcies fell. So at least businesses, as we say here, are doing well, even if people aren't doing super well. All right, guys, 7 slides for 7 days. Absolutely no excuse why you can't go forward and make some money. Have a good week. Take care.